How you doing? Mac McCord here, Coakley Realty, licensed real estate agent in Maryland and in Washington, D.C. And I'm here with a very special guest. Please introduce yourself.
Hi, my name is Shannon-Marie. I'm a loan originator with Envoy Mortgage. I'm licensed in D.C., Maryland, and Virginia.
So today we're going to just sit down and ask questions, commonly asked questions for a loan originator. So
All right.
we're going to start here. What are the main types of loan programs out there?
So that's a great question. So there are four main types of loan programs. There's a Veterans Administration loan, the VA loan. There's the USDA home loan. There's conventional financing, and there's FHA financing. So the first two I mentioned, VA and USDA, these are the only two 100% financing options, meaning you don't need a down payment. There are other 100% financing options out there that aren't technically 100% financing. There's some creative ways that you can do it to have a situation where you don't put money down, but VA and USDA are the only true 100% financing options. Conventional financing is what 90% of Americans use, and it's what clients who have above a 700 credit score would go into. FHA is for clients who may have a credit blemish or two, but it's a really wonderful program that helps a lot of clients get into a home. So we have plenty of options to help you find the perfect home.
So I guess one of the other questions that I've been asked a lot, and I'm sure you get it more than I do, is what are lenders looking for?
Another great question. So lenders are looking at your entire financial profile to really make a determination of can you repay the loan in good standing. So the first thing we look at is obviously your credit score. So not only what it is, but your past payment history on your liabilities. We look at your income, not only how much you make, but how it's structured. So are you commissioned? Are you salaried? Do you get bonuses? We also look at what's called your debt to income ratio. Now this is an extremely important calculation when we are putting your information through our systems and through our algorithms. The DTI is the percentage of your monthly income that goes to satisfying your debts. So it's everything that you have to pay every month to pay off your debts, and that's really heavily used. Generally, we need a DTI below 50% to help you qualify for a mortgage.
And then the next thing is things that limit how much you can afford. These are typically things that a lot of people don't know. So this would be a good piece of information for people to know.
Yeah, so everybody wants to know how much they can afford. So what purchase price they can really purchase at. So there are three main things that limit how much you can afford. First is your income. So we have to see, how much of your monthly income can you afford to allocate to a mortgage payment. Then we're going to look at your debt to income ratio. So how much of your monthly income is dedicated towards satisfying your debts. This is another limitation when we're making our calculations. The last one is your down payment. So how much cash on hand do you have to put towards a down payment on a home? So, those are really the three main limiting factors. There are others, but those are the main ones. Your monthly income, your debt to income ratio, and your down payment.
What are things that you should focus on just as much, if not, more than the interest rate itself?
Yeah, so interest rates are going up. We have been in an unprecedentedly low interest rate environment, but they are beginning to return to their industry average, about 6 to 8%. That being said, there are things other than your interest rate that you really should focus on. First and foremost, I think finding a loan officer that has your best interests at heart, that is going to look out for your financial well-being as a whole and not just your mortgage decision. You also want to work with a loan company who has the infrastructure to take care of contingencies that may come along. You want an organization that is on your side and prioritizing your loan. It's really important to work with inside your means. So, everybody wants to afford as much house as they can afford, but, as a loan officer, we don't want to see clients going into a situation that could be a struggle for them. It's a good idea to, really work within your means.
Yeah, so one of the things that as I'm talking to people, and I point them obviously to you and to, seek loan officer for the professional help that they need, I always tend to tell them, like, you might be approved for whatever the amount may be, but you have to go with the amount that you feel comfortable.
Exactly, yes.
On a monthly basis.
Yeah, and that's really important. You know, we all may want to afford the beautiful house on a hill, but, you know, when it comes down to it, I don't want to see a client go into a situation that's going to be financially uncomfortable for them. It's just not healthy financially or for somebody's well-being. So, you know, there are wonderful loan programs, and with a great realtor, you can find a wonderful house within your means. So it's highly recommended that, you know, you may be able to afford what you can technically afford may not be something that's comfortable for you.
Yeah. So then we get into what people usually don't want to hear, but they need to hear.
Yes.
The no-nos, the things that you should not buy or you should not do when you're applying for a loan and looking to get a house.
Mm-hmm. So this is really important. When you have started the loan process with a lender, there are some things that you do not want to do without consulting your lender first. So these are things like buying a car, substantial purchases, purchasing appliances for your new home. We don't want to see that debt to income ratio change. It could throw off all of our calculations and force us to restart the loan process. We also really don't want you to run credit reports on yourself, anything that could, you know, affect your credit score one way or the other. Don't move assets around. It's another big one. Changing jobs can be very, very difficult in the loan process. Really try and stay with your position. And don't deposit large sums of cash. So all assets have to be documented for anti-money laundering laws. So it's important to, if you have large sums of cash, not to deposit that during the lending process.
Okay, so one that people are always looking to how can they get the funds that they need, whether it's for down payment, early, the earnest money deposit, things like that. What funds can be used to purchase a house? Yeah,
so it's not just your checking and savings account. So we can access money market accounts. We can even access retirement accounts in most cases. Gifts from family, gifts from a close relative are also acceptable. And we can also work with a great realtor to get seller concessions, which is when the seller gives back a portion of the purchase price to help you with closing costs. The last option is down payment assistance programs. Now, personally, I believe down payment assistance programs are wonderful for a lot of clients, but very few clients actually meet the criteria that they're exceedingly helpful for. Generally, a down payment assistance program is going to be my last resort because they are substantially more expensive. However, if they're necessary and they're beneficial for the client, they really are wonderful programs to access.
So with the down payment assistance, you said that they are expensive for the client. Mm-hmm. Can you kind of elaborate on that a little bit?
Yeah, so with a down payment assistance program, they're essentially gifting you the funds for the down payment. Now that down payment can be a gift and for which you will pay a higher interest rate, or it can be a second loan for which you may have to have some sort of repayment plan or have to pay the money back once you sell the home or refinance the loan. So there are some stipulations on it. You can expect higher fees, you can expect a higher interest rate, and generally to have to pay the down payment loan back once you sell or refinance the house.
Thank you very much, Shannon-Marie, for coming in here and giving us all this great information. Kind of what else, kind of in closing here, what can you say? I know you've done, we've been working closely for the last few months here now, and it's been a pleasure. It's been a great pleasure of mine to partner up with you, as a lot of people say they really like the vibe that you give off. Kind of
Thank you.
What's your take on the job and the process? And
Yeah,
your outlook on things.
You know, as your real estate experts, we're here to help you make a very big decision, and something that's going to lay the foundation and help you plant your roots for your family and your future. So, you know, as your team, we want to help you in every way we can. And I think we don't only have your real estate and financial interests at heart, we have your best well-being interests at heart. And so if there are any questions that we can answer for you, you know, I think, and just reach out. We're happy to help in any way we can.
If you have questions about loans, the process, real estate, the process with that, anything that has anything to do with buying or selling your next home, refinancing your next home, or your current home, I should say. But any questions, please don't hesitate to reach out to us. It's been a pleasure. Thank you very much.
Thank you. Hope you all have a wonderful day.
Have a good one.